Now, the Indian rupee has plunged to new lows against the US dollar, depreciating 7% since the start of the year. And this is due to factors including the US Federal Reserve's interest rate hikes and an outflow of foreign funds from Indian stock markets. The currency slide is causing a headache not only for policymakers, but for a number of businesses as well. Rebecca Budden reports from Mumbai.
This company, which imports raw materials to make synthetic rubber, is finding it tough to absorb the Indian rupee's fall to historic lows. Nishiganda Polymers is taking a hit because the rupee now buys fewer dollars, making the goods it brings in, priced in the US currency, more costly.
When the rupee depreciates, when we make the payment later, we incur a loss because our payment which goes to our supplier or to the bank is at a higher rate of versus the dollar. So our costing has gone up. To that extent, we incur losses directly in our own balance sheet.
The other challenge the business faces due to the rupee's fall is that the prices of some of its imported products are now less competitive compared with the same goods produced locally. As a result, the company's sales of some of its materials have declined. The Indian rupee slide has been sudden, and it comes despite reports of intervention in foreign exchange markets by the central bank, the Reserve Bank of India, to support the currency. Its slump is partly due to the dollar's strength, as the US raises interest rates, and foreign investors pulling out funds from emerging market equities amid a tightening of liquidity globally.
The rupee's weakness is also exacerbated by the country's widening trade deficit, due to factors including high crude oil prices amid Russia's invasion of Ukraine. This trade imbalance leads to more demand for dollars over rupees.
With imports to India projected to continue rising at a higher rate than its exports, analysts widely expect the Indian rupee to depreciate further, past the psychological mark of 80 rupees against the dollar. And this has consequences for everyone.
The landed price on Indian shores of any and everything that we import goes higher due to currency factors alone. And this results in what economists call imported inflation. Now, higher imported inflation would mean everything from your cell phones to your laptops and smart watches and any and everything, LED lights, etc., are going to get more expensive.
Trips abroad are also costing more as travellers get fewer dollars for their rupees. And this comes as people are eager to jet off overseas as COVID restrictions eased.
The businesses definitely got affected, and we've been into the requirements of the people have also has definitely been subdued by the rate which has gone up. But to some extent, people who wanting to travel have travelled this season.
There are some sectors that benefit though from a weak rupee. These include Indian exporters, such as IT firms and pharmaceutical companies, because their prices become more competitive, or they get more rupees when they convert their dollar earnings into the local currency. Authorities want to keep the rupee slide in check. The government this month introduced duty hikes on gold imports and some fuel exports in an effort to reduce imports of gold and crude oil and support the rupee by narrowing the deficit. And the Reserve Bank of India has announced a mechanism to allow international trades to be settled in rupees. Such steps would take time to have an effect on the currency, analysts say. But the fact that authorities are stepping in gives importers like this one hope that the rupee won't tumble out of control. Rebecca Budden, CNA, Mumbai.